You are listening to chartingwealth.com for Monday, the 1st of June, 2015. This is our daily market review, not to be confused with our weekly market review. Just turning up the screen there, IYY is what we are looking over. And this, again, is the daily review. We're also recording on audio only our weekly review and forecast, but it's important. We encourage everyone to listen to the daily every single day. And of course, at the end of the week, beginning of the week, go and listen to our review and forecast. Here is where the total market has been for the last 8 days. This is, again, is a 2-day chart. It's actually, it's the week. And you can see where the market had peaked out and then started moving over. We have drawn a down trend line on the 2-day chart. We had crossed over back a couple of days ago, going down on the chart. We had a day here of a lot of indecision, this green candle, and over the last 2 days you can see that, again, we've not gone below where the market went on the 26th, the 2-day chart for the 26th, but it is trending down. We do have a good trend line that's been drawn that's connecting just about 3 candles, is what we always like to see. And we have the 2-day chart crossing over now, going down. So we are officially in a downtrend. Let's revert back and look at the 4-hour. And of course, you can see the 4-hour half-day chart. Those of you who are watching, listening, I'll tell you, the 4-hour chart has crossed over, going down. It has broken the 2-day trend line. So we are officially in a downtrend on both the 2-day and the 4-hour chart. That is where we stand. Now, again, our weekly review, we're going to look at the weekly chart and we're going to look at the 1-day chart, and we'll give you the whole week in review. But what we're looking for is planning on what's happened over the last day and where we are going on Monday. So we are officially on the total market downtrend on the long chart and on our shorter chart. So we are matching up. We had been a little bit schizophrenic over the last few days, but now that is over. Now let's go ahead and range back out to the 2-day chart. We're going to look at SPY. Again, SPY officially for the day down 0.62%. IYY, which is the total market, down 0.56%. SPY is down a little bit more, and again, very similar looking trend line, very similar looking chart, rotated over about the same time between the 28th and 29th, going down. Now let's range out from there to the 4-hour chart, see what we see. And again, broke through. This is the 2-day trend line, and we had a breakthrough, officially breaking down on that chart also through the 2-day trend line. So we are again on the SPY, which is again is the Standard & Poor's 500. We are down on that chart also. So we are officially down on the SPY. Now let's revert back to the 2-day chart. Let's look at IYY. Oh, I'm sorry. Let's look at not IYY, but the Qs, QQQ, and that is not loading up for us. Let's see. A little bit of a technical difficulty there. There we go. We've got the Qs. Come on, Qs. That's how easy it is on these freestockcharts.com to add in any and everything you want. So here's where the Qs are. The Qs, now, they are different than the total market and the SPY. What do we have on the 2-day chart? We had a crossover going up back on the 14th, between the 14th and the 18th. And look at the Qs. It has continued to move up nicely. We are in an uptrend on the Qs. Let's look, and officially for the day, the Qs are up. Let's look at the 4-hour chart and see what it tells us. It shows to us that we are actually rotating over, going down on the 4-hour chart. That's the half-day chart. Again, we're looking at the big 2-day chart. Remember, the whole market was pulled down. That tends to influence everything. But as far as where things are on the Qs are in an uptrend on the big chart and on a downtrend on the short chart. Again, a little bit schizophrenic, but we do not have any break as far as the 4-hour chart and the 2-day chart goes, we're looking at a bit of schizophrenia there, but the 2-day chart is the one that we go by. It is in an uptrend, and that is what we always use to follow. You can, and again, you can see the kind of time period that we're in right now. We talk about this all the time, the sell in May and go away. You can see how the market started slipping sideways here. Again, when the volume starts leaving the market in May, as it does traditionally, sell in May and go away is not a rhyme that you hear in the market for no reason. That's what typically happens. A lot of the volume leaves, so the market tends to track sideways. I mean, look at this. The market is no lower. I mean, you can see it's gone up, it's gone down. It's tracking a little bit down right now on the short chart. And again, no clean movements. Now look how much cleaner the movements are if you go back in time. Even on the 4-day chart, which is only a half day, look how much cleaner the movements are. Crossover here, look at that clean up movement back all the way in January. Look at the nice clean down movement tracking for quite a while toward the end of January, beginning of February. Look at the clean up movement when the MACD is crossed back on the 3rd of February and tracks up, 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 up. Look at this wonderful long gain you could have been until it crossed over going down on the 25th. And again, using our MACD, it tracked up a little bit more, but then it continued its down move. Then look at the beautiful crossover and another. I mean, you could have just used the 4-hour MACD and made money over and over and over again. Got a little wishy-washy as we, of course, got through the month of April on into May. And then you can see how things started sliding sideways and got choppy. We had one good down move starting somewhere around the 30th of April. And again, a little bit. And then it starts getting choppy. Then you start getting these movements where it's up and then it's down, it's up and then it's down. That's not what you want to see trading. That is why if you follow Jeff Hirsch and his dad Yale Hirsch and their fabulous book that comes out every year, the Stock Trader's Almanac, they will tell you over and over again. In fact, page 52, I read it all the time, page 52 of the 2015 edition tells you about the 6 best months for trading. I commend it to you. Go buy that book, read it, look at it every day. It is so helpful for giving you trends and what the market's up to. So that's where the cues are. Now, let's do our last thing. We're going to go back to the 2-day chart and we're going to look at gold. What is gold doing? Well, we called gold yesterday, crossing over, going down on the 2-day chart, the 4-hour chart. It had also crossed over way back here on the 19th. It is below the 2-day trend line that we drew, ticking up a little bit. Again, gold has been slipping sideways. You can't really see it as much on the 4-hour chart as you can on the 2-day chart. Gold has been slipping sideways for quite a while. Look at this setup starting in, oh gosh, about the end of March. Yeah, the 27th. It has slipped sideways up until now, still slipping sideways a little bit. It is officially in a down move on both the 4-hour and the 2-day chart, crossed over going down on the MACD. So we're in an official down move on gold, nothing super strong. But again, we've started tracking it. That's where we stand on gold. So it was for the day today, up officially 0.07%, not a lot. But it has not broken the trend line and it's still below. That is where we stand on gold. That is where we stand on the indexes that we follow, the total market, the SPY, and the Qs. Hope this has been helpful. Again, please make sure to tune into our weekly review and forecast. We appreciate you joining us every day. We love to hear from you. Please follow us on Twitter, Facebook, email us, go to the website, sign up for our daily email, and get all this sent to you every day for free. Again, that's chartingwealth.com. Thanks so much. Hope you have a great week of trading.